Hello everyone. This is the pre-market report video for today, 24th July 2024 for the Indian stock market in terms of Nifty and Bank Nifty. In the last pre-market video, I mentioned four things in the budget that might affect the stock market. Out of those, two happened, one turned out to be positive, and the final one is still unclear to me. So in this video, let's discuss those in detail and look at some history to understand how the market has reacted in similar situations over a 1 month period and how we can interpret those reactions for the present scenario, etc. First, we discussed that if the Indian government increased the fiscal deficit for the current financial year to above 5.1% or 4.5% for the next financial year means, then it would be disastrous since this is a wider market influencing factor. Luckily, it happened in our favor. The finance ministry didn't increase, rather they lowered the fiscal deficit like 4.9% for the current financial year and below 4.5% for the next financial year. This is an unexpected positive. The second budget upset we were afraid of was the increase in capital gain tax, and it did happen. Most of our channel viewers might already know this, but for everyone's benefit, I would like to discuss it very quickly. Effective from today, the long-term capital gain tax increased from 10% to 12.5%, and for the short term less than 1 year, it increased from 15% earlier to 20%. Clearly, this is a market upsetting factor. When it was announced in the parliament, the market fell by 500 points, but it recovered afterwards. So now, what does history tell us? In 2018, when Arun Jaitley introduced the long-term capital gain tax, the market closed flat with a negative bias on budget day. But in the next 30 days, the market crashed by 5%. For the present market scenario, that's equivalent to 1,225 points. So can we expect the same? Maybe and maybe not. First, let me explain why it may not happen, and then we will discuss why it might. In 2018, the long-term capital gain tax of 10% was introduced on February 1st, but was effective only from April 1st. So from the day of budget announcement, at that time, investors had a 2-month period to sell stocks and save on capital gain tax, which increased the selling pressure in the market and subsequently led to the sell-off in the next 30 days. Now coming to the present day, unlike 2018, in 2024, investors don't have the luxury of 2 months, rather they got only the luxury of 1 day, meaning investors had only 1 day to react, which was yesterday, as the new long-term and short-term capital gain tax are effective from today. So selling stocks today or after a month will incur the same level of new capital gain tax. Hence, no sensible investors will sell their shareholdings just because of this capital gain tax increase. However, if investors sold their shareholdings yesterday, then they would incur the old capital gain tax, 10% for long term and 15% for short term. And that's the reason yesterday almost all the banks were sold off as investors booked profits. Only Federal Bank and Kotak Bank closed positive. Here Federal Bank was positive because of the appointment of new CEO who was previously head of Kotak Bank. Other than that, in order to take the advantage of low capital gain tax, yesterday all the banks were underperformed. I hope everyone can able to follow me. Now coming to why market might fall further. As I said earlier, increasing the capital gain tax is the last thing any investor wants. Psychologically, this is negative. So only because of psychological reasons, the market might sell off. Other than that, there is no sensible reason I can think of. Then the third upset is the increase in STT in the derivative market, but that will be effective only from October and only time will tell its impact. Sector-wise, FMCG, IT, pharma and auto increased between 0.5 to 3% as these sectors benefited from the budget. On the other hand, the realty sector was significantly affected as indexation was removed, which is huge negative despite the capital gain tax in real estate dropping to 12.5% from the previous 20%. Regarding banks, as I said, I think the budget's negative impact is short term, just for 1 day. So those are the highlights about the budget. Now coming to US market, last night it was very flat and muted. I mean, there were no major macro releases yesterday, and at that trading time US market was eagerly waiting for Tesla and Google results. So all three US major indices closed flat with a negative bias. Dow Jones was down 0.14%, S&P 500 down 0.16%, and Nasdaq was nearly flat, down 0.05%. Despite the market closing with a negative bias, VIX also decreased slightly. Then after the US spot market close, Tesla's quarterly results were terrible, and in post-market trading, Tesla shares dropped by 7%. Whereas about Google, despite its earnings beats the analyst estimation, still Google stock also down by around 2% in the aftermarket offline trading. So global momentum is not good. In line with that, early this morning, GIFT Nifty closed at 24,436, indicating a gap down opening of 50 to 70 points. Regarding Indian ADR, I don't think there was any fresh movement. All major stocks closed more or less the same as in the Indian spot market. Now, regarding the new Indian market info, I would like to highlight three things. One, in the aftermarket hours, Hindustan Unilever and Bajaj Finance both released their quarterly results. About this, I didn't have enough time yesterday to deep dive into these results, but clearly Hindustan Unilever's quarterly results beats the analyst estimates comfortably. Similarly, Bajaj Finance yearly profit increased by 14% and the total income increased by 29%. So both these results looks very positive to me. Let's see how the market reacts. Second, Coal India won the graphite block mining auction for the first time, which various analysts praise as it will improve the Coal India's sustainability rating. So today, Coal India stock will be on focus. Finally, regarding institutions, after 7 days of net buying, FII turned as net sellers, net selling near 3,000 crore rupees, and DII turned net buyers, net buying around 1,400 crore rupees. As a summary, global momentum has deteriorated. In line with that, GIFT Nifty indicates a gap down opening of 50 to 70 points. Regarding the things to look out, Axis Bank, Bajaj Finserv, L&T, Federal Bank, SBI Life Insurance, KPIT and Karnataka Bank are the some companies shall release their earnings today. In terms of macro data, not much is expected before market hours, but during market hours, India's PMI, UK's PMI data, France PMI, Germany's PMI data and the whole European Union's PMI data all are scheduled to release between 10:30 a.m. to 2 p.m. In the evening for US, their PMI data, new home sales data and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 50 points gap up and was in the range bound, but in the afternoon during budget, Nifty fell sharply and hit the day's low 24,074. However, that dip was quickly recovered and closed near 24,500. Thus, on the daily chart, Nifty formed a bearish candlestick pattern with a long lower shadow resembling a hammer-like pattern. This indicates buying interest at lower levels, which is positive even though momentum indicators showing a negative trend. Additionally, Nifty smartly defended the 10 and 20-day exponential moving average on a closing basis with 24,000 acting as a sturdy support. Hence, the immediate support is at 24,200 to 24,100, whereas 24,600 to 24,700 is the immediate hurdle zone, with 24,850 as the crucial hurdle on the higher side. In case of Bank Nifty, it opened 150 points gap up, however, dropped and closed at around 51,780. Thus, on the daily chart, Bank Nifty formed a long bearish candlestick pattern resembling a bearish engulfing sort of candlestick pattern. In addition, it closed below the upward sloping support trend line and also slipped below the 21-day exponential moving average 52,038, which all indicating a weakening trend. Hence, the sentiment is weak for the short term or until Bank Nifty claims above 52,100. Regarding the monthly options data, the maximum call option open interest was at 25,000 strike, followed by 25,500, with new maximum call option writing at 25,000 strike and then 25,200. On the put side, the maximum open interest was at 24,000 strike, followed by 23,000, with maximum new put option writing at 23,900 and 24,000 strike. Thus, from options data, Nifty may face resistance at 25,000 in the short term, while 24,000 may act as a key support. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.